I wasn't surprised to see they pushed the filing date back from January 29th to February 12th. There's a lot of programming they're going to have to do to account for both the first and second phase of the stimulus checks that went out in 2020 and also at the very beginning of 2021, which I think is causing part of the problem here because we've got stimulus check payments that cross calendar years. We've also got a whole bunch of new programs that came out during quarantine that still have to be reconciled. And I don't know that all of the kinks have been worked out for that yet either. But it doesn't mean we can't start preparing tax returns right now, that we don't have most of the information we need right now. What we end up with is kind of a big backlog of tax returns to transmit when the gates finally do open, which is tentatively set now for February 12th.
Okay, so that kind of leads into my first question, and a lot of people are probably wondering, do you need to report your COVID-19 stimulus money as income?
There's actually a new recovery credit sheet on the tax returns for 2020. It does not necessarily count as income, but we have to reconcile whether people who should have received it did receive it. And if they didn't, they can claim it when they file their returns. We need to make sure that people who shouldn't have received it and did receive it have a way of paying that back because both of those things happen. So what the worksheet basically looks like right now is question, did you receive the May stimulus payment? Yes or no. Should you have? Yes or no. Did you receive the second stimulus payment? Yes or no. Should you have? Yes or no. And the answer to those questions determine whether or not you actually get additional stimulus, or if in
Interesting.
fact you got stimulus that you shouldn't have gotten in the first place. And
How
many people did.
really a lot of people did that?
Yeah,
Were they required to send it back immediately, or are they
I
going to
believe
have to pay
so.
it back like this?
It'll all be reconciled on the returns.
Interesting. Okay. Um, I think another question people are asking is they maybe have spent a lot of money on a home office this
Hmm.
year.
Uh-huh.
Are they able to write that off on their taxes and claim that as a work expense?
So one of the big tax code changes that happened in 2018 was that we could no longer claim unreimbursed employee expenses when we itemized our deductions. Now, not everybody itemizes. Most people who don't own their homes are actually taking a standard deduction, so it's a moot point for those folks anyway. If your employer will not reimburse you for your home office costs, then it's generally not considered deductible. Now, if there's any changes to that for 2020, I'm not currently aware of them.
Okay.
So they could be sunk costs. If you're self-employed, you can always claim a home office deduction. But if you're furloughed or working from home for a major employer and you get a W-2 every year, there's not necessarily an advantage for that unless your employer agrees to reimburse you.
Also, in the realm of people working from home, not for themselves, but for another company, do they have to pay taxes in the city their office building is in for the months that they worked at home?
So this is still under contention too. I think here in Columbus, Columbus has made a pretty strong argument that they should continue to withhold Columbus City payroll taxes for people who were working in the city and would otherwise still be working in the city of Columbus. I'm sure that that's up for debate and up for renegotiation or whatever you want to call it for 2021. If people who are, decided that they're definitely not coming back to the office in downtown or anywhere in Columbus, but perhaps they're going to continue to work from home in a suburb, and they're not coming back at all. Well, there's your strong case for moving the payroll tax to your home city rather than the city in which you work.
Interesting. All right. So, you kind of touched on this in the first question, but I feel like I should follow up with this. Are there any
Sure.
other tax write-offs people can apply for who have worked from home if they do the long form,
If they itemize,
if they
is
itemize?
what you're asking me.
Yes.
Nothing really I can think of. I think what's really important here is that these folks check with their employers to see if there are any costs that they can be reimbursed for through their employer. It's probably going to be their best option or their best bet at this point.
Now, talking about potential refund amount, where people might be seeing less, do you think people are going to be seeing less for childcare if they didn't have to spend as much at a daycare or a babysitter this year, when all of
Now,
those were shut down?
So that's always possible, but keep in mind that the child care credit is a pretty small credit on an individual's tax return. Now, I'm not saying that it's not large for some people, but the maximum child care credit is $600 per child. So, obviously, if you did have a lot of children or a lot of dependents that you were paying for daycare for, and you were no longer doing that because you were working from home, you could lose $600 per dependent or per child. But it's not the big deduction that people kind of view it as. Your $2,000 dependent care deduction is a lot better than that.
And what's that? Can you explain that?
Well, every dependent that you claim on your return is worth $2,000 on the return. The child care credit, in contrast, is only worth $600 per dependent.
Got it. Okay. And what about student loans? Because a lot of people were paying a lot less interest on their student loans. That's going to expire at the end of the month so
Hmm.
far. So is that
Hmm.
going to impact potential refund amounts as well? Because I know people
You know,
do get a significant amount, a couple $100s, not significant, but still significant to some people.
yeah.
Is
So
that
you're
going to
close
be?
on that. You're close on that. The maximum student loan interest deduction is $2,000.
Mhm.
If you deduct that from your taxes, you're probably saving a couple $100, maybe a little bit more, maybe a little bit less, depending on your marginal tax rate on your return. And some of those loans might have gone into forbearance, which means that maybe somebody would have had a $2,000, and in the extreme case, a $2,000 student loan interest deduction, and it goes down to zero. It's going to have an effect in the scale of the hundreds on their return. So,
Interesting.
so yes, it could be lower. You're right. There could be a lot of deductions that people are used to taking that they're not going to get. And actually, I thank you for bringing that up because I haven't given that idea much thought yet because I haven't done more than maybe 10 or 15 returns so far.
Well, I got the idea when I got an email this morning on my own that said, "Hey, you're the uh, they suspended the interest
Hmm.
accumulation, I think, or something
Hmm.
along the
Yeah,
lines." Luckily, I was able
it
to,
was in forbearance.
yeah,
That's interesting. I
some.
hadn't thought about that, but hopefully, if it does have a negative impact on some of our clients, that it won't be noticeable, that it will be negligible.
Okay. What other tax changes do people need to look out for this year?
So there's not a lot of changes. The biggest problem we're going to have is reconciling the timing of the stimulus payments, both one and two, on folks' tax returns. It's entirely possible that the IRS believes they issued a lot of checks that were never received or cashed. And so we're going to have all of this back and forth. I feel like it's going to be another year for slow refunds, a lot of disputes, a lot of letter writing, a lot of phone calls, a lot of tears and sweat, just trying to get those reconciled for our clients. Um, One thing that I've noticed is that tax fraud was really, really ramped up in 2019 for the 2020 filing season. It's not abnormal to see a couple of clients have their tax returns rejected because of tax fraud, but I feel like I had about 20 clients whose returns were flagged for potential tax fraud last year. And if you poke around on the internet and do some searches or read some of the information coming out of the IRS's own media channels, it it's something that we all need to be careful of, making sure that we safeguard our personal information. It's more important now than ever.
Have we ever seen anything like this, or is this unprecedented? What's happening with the trying to figure out this tax situation with the IRS?
So, if you're talking about the stimulus payments, I think
Mhm.
it was under the George H.W. Bush administration where we had $300 stimulus checks issued, and it was the same problem back then. I can't remember what year it was. I want to say 8 or 9, but I could be way off. Um, Same problem was reconciling, were you eligible? Yes or no. Did you receive it? Yes or no. And it's entirely possible that somebody could say no and yes that did receive it. And then how does the IRS treat that? There's a potential for abuse, and we have to make sure that we do everything in our power to make sure that folks don't either intentionally or unintentionally abuse uh, the stimulus checks.
All right, last question for you. What's your biggest piece of advice for people who are filing their taxes this year to make sure they do it right?
Make sure, first of all, that you know the status and the timing of your stimulus checks. Make sure you know whether or not you received them and cashed them. A lot of folks who had them directly deposited into their bank accounts have no idea whether or not they received the payments. And so, if they didn't check, they didn't look, and they're not in the habit of checking, that it's entirely possible they got it and they're going to tell me they didn't. So you also want to make sure that you have all your documents available before you either file on your own or you go out to a professional. Usually, you have to do a tax professional. You get a checklist every year to help you make sure you have everything. One of the worst things you can do is to file your tax returns and then find a 1099 come in the mail a week later that you should have included, or a W-2 from an old employer that you forgot about that you should have included, or maybe even your home mortgage interest statement. It got sold or you refinanced and you put one on the return, but then a second one comes after you file. Hopefully that won't be as big of an issue this year since we can't file before February 12th, and those documents are supposed to be postmarked by January 31st. So
Interesting.
hopefully that won't be as big of a problem.
One more question about that. You mentioned the direct deposit. So whenever people do go through and say the question is asked on their tax form, did you receive the stimulus money? Do you just say yes or no, or do you have to prove that with a certain code or anything like that that you did
No,
receive that direct deposit?
so far, as far as we know, it's as simple as a checkbox on the return.
Okay.
Um, Keep in mind, a lot of people got prorated deposits. So you're really going to want
Yes.
to see what the advice in the description on your bank statement says, whether it says United States Treasury or
Hmm.
IRS or Internal Revenue Service. A lot of people didn't get a flat